Hello and welcome to etbfsi.com. This is Fintech Diary and my guest for this chapter is Shinjini Kumar, co-founder of Salt. Shinjini is a veteran banker, technologist and also a policymaker, must say, because she worked with RBI for more than a decade. And she has started this app specifically and dedicatedly for women. Shinjini, glad to have you.
Thank you.
So let me understand first about Salt. We have been talking about pink sugar and so many other adjectives specifically when it comes to women, but you're adding salt to it, right? So tell us about Salt. How is it working? What kind of business model are you bringing? And more importantly, what is the solution that you're offering to the ladies of this country?
First of all, why the name Salt? Okay, so the name Salt actually came from our understanding of women and their work. And women and their work is very interestingly essential to life, but is also very cheap. And salt, I think, was a very apt metaphor for what we were trying to do, which is to let people think of their money as something which makes their life happen, which gives that taste to, which makes your cake rise, which makes your, food taste better, but is not a dish in itself. Yes. So we want money to be something which is an enabler for people to live a life with purpose rather than just sitting there and generating alpha. And that resonated very well with the target segment that we were going for, which is women. And again, Salt has been associated with revolutions. And when we started to look at the data relating to women and finance, we found that such few women actually took ownership of their money, made their own investment decisions, took care of their own wealth. And this was even women that had their own independent source of income. So I'm not even talking about women that didn't have income. Women that had income were still not creating wealth for themselves. And so we said, okay, fine, so Salt spoke to us very, very well on all these parameters. So we called ourselves Salt. The thing that I want to say though is that we are dedicatedly solving the problem of gender gap in finance and getting many more women to become wealthy. But we are not exclusive to women. And I'll go ahead and talk a little bit about why we thought that time was right for these type of approaches to understanding customer cohorts that might behaviorally be different from your mainstream customer. Because the main customer, the default customer for finance has been a male. Right. It's not just been a male, it has been a male of a certain type, a male who starts working after business school or college and goes through a long career, can take a mortgage, can do SIPs, can save over a period of time, has a retiral, has children, for some reason 2 children. So there's a predictable life cycle of the finance customer. Now women, as you know, don't live that life.
Right.
Even if they start out from the same business schools or colleges and they start in the same workforce. I've worked in a big 4, right? Yes. And one of the things that used to constantly shock me is how men and women came from similar backgrounds. They were both chartered accountants. Many times they knew each other and then they got married and then the men took the career trajectory and the women started to drop off. And then once they drop off, they don't come back for whatever reason, but they're very smart women. And therefore we said, okay, so let's build for this person. Let's build for this person who's a smart person. She understands finance. She takes care of money all the time because her life is dedicated to making life happen, which requires money to be used. But she's not managing she's leaving these asset creation discussions or decisions to her husband or to some other male. So that was our starting point. And I'll talk a bit more about that, but let me just hand it to you now.
No, quite interesting, Shinjini. In fact, very meaningful. You're finding your niche and you're spotting those ladies, women who are really smart, but somehow they, lag behind in the process. So what are the products that you're offering and how has been the demand?
Sure. So, it's very funny. The first product, so to say, that we launched was, we didn't think of it as a product. We did it because when we started out, after some time, we realized that if we really wanted to build trust and transparency, we would require our own license, which took time to come because you have to apply and then you have to get the license. So it was taking time. We had a team, we had a very good data team and we had engineers. So we built this something called money personality test. which was our way of getting to understand the customer psychology, because we are very much about money being, you know that sentence, right? That money is more psychology and less mathematics, right? We all know that by now, but it's very hard to convert that into product.
Yes.
So we were trying to productize it because we'd done almost 500 interviews with women. And from those interviews, we had a lot of insights. And we realized that people relate to money. We all know this by now, right? If you read Money, Psychology of Money, you would have read this. Because people, same incident, same date of birth, sometimes same family, but two people will have very different decisions about money, right? Yes. So we said, where does that come from? What makes it so different? So all of those questions we were asking in our interviews and etc. And we had developed certain amount of insights. But then we needed more data to be able to say that, with confidence that yes, women are different from men in certain aspects. Yes, psychology is important to money decisions, etc. So we built this money personality test. It takes about 2.5 hours to take. And then initially we just put it on Twitter like casually, and people took it. And we realized that 70% of the people who took it were male, because internet is also male. And then we started to curate, audiences and put it out on Facebook and Instagram, etc. And by now we've had 200,000 people take it, and almost 70% of them are women. So we learned two things in the process. We learned behavioral insights. We learned what are the actual significant questions on which women statistically give answers that are different from men. And we also learned that how to actually get to these women.
Right.
How to find that woman on the internet, because that was the quest that we were after. So that was the first product that we made actually, and that's still doing very well. We don't put any money behind it, but we have now understood that people how to continue to do that. Then we built something called the Passbook. It's a product that I'm personally very passionate about, because I think we've never been able to solve the problem of, because in India we have very fragmented payments. So you swipe your card, you flash your UPI code, or you do transfers, you use IMP. So you use multiple channels for your payments. Debit cards also. So, and your bank statements also, most people who have money also have more than one bank account. So just getting a very good understanding of your money is something which we haven't solved that, right? Unlike a few other countries where the idea of open banking, etc., has made that kind of product development possible. So we said, okay, why is this an important problem to solve? Is because the customer that we are going after, the woman, her primary relationship with money is driven by spending.
Okay.
Or earning, but in not as a monthly salary, but mostly as a little things that she gets from different places. So many women that we spoke to posed this question to us, that we don't invest because we don't know how much money we have left at the end of the month. So we created something called the Passbook, which is an NLP based tool, and it's actually fantastic. And by now we've again had more than 2.5 lakh data points that have been entered into that. And actually, if you see the economic value that has been captured through that, it will be close to about 8 crore. Because people type and they say things like, I had a coffee with somebody, or I invested so much, or I received my salary, or I got a payment, or I got whatever. So they capture those things. So Passbook is a feature that we think helps us to create that fulcrum around which the customer's financial life is organized. Because our mission is not just to tell you to invest. Our mission is, that's why SALT. Our mission is not to tell you that you invest and you generate a return for yourself. Our mission is to help you live your financial life in a way that it helps you become wealthier. It helps you live your life with the purpose that you want to live for. So the Passbook actually creates that fulcrum for us in which the customer is able to organize their financial information. And then of course we got the stockbroking license earlier in the year. So we've released the mutual fund direct investing. So that was another decision that was, it's like when you stand for something, you have to pay something for that to be meaningful. True. So we paid, we said, okay, I came from a banking background. Sure. So for me, distribution made a lot of sense because that's what we had been telling all our clients who were coming and telling us direct chahiye. And, but then Aditi, who's my co-founder and a very smart woman, she stood for direct. And she said, direct is the way to go, because we don't want to take commission from AMCs, because that will affect the nature of our advise that, let's not say advise because we are a stockbroker. So we basically show you. So what we show you should not be affected by who's paying us commission. So we decided to go for direct model. So we only sell direct mutual funds. We also took a decision that we will sell only mutual funds to start with before we get into equities, etc. Because of the nature of our client that we were talking about. Most of them are investors. Most of them want to create wealth for certain purposes in their lives. Their purpose is not to do trading and generate alpha. If it is, then there are great apps available already. So we didn't want to be in that space. So yeah, so that has been launched. And the last thing that we have on our app, if you open it, is a digital gold, because we built it as a reward that for passbook, actually we wanted people to, encourage their behavior, to say, what will you do? So we built it as a reward program and people started to top it up. So it kind of became a product by default. But we do want to offer more products to people for saving, because we realize that investing is a need, but also saving continues to be a need with our client segment. So yeah, so you will see more on that space, both on that space actually.
Okay.
Yeah. You'll also see credit actually.
I'm sure.
At some stage.
I'm sure. My question to you now is, how do you see this model in two parts? One, at one side, you have to also become a profitable. You have to also be a sustainable model. And at the other side, you will do that only when you have a number of people coming on your app, maybe buying the products, and maybe you then, getting commission or whatever the fees that you're going to charge. So how has the market changing right now, considering, the digital revolution is happening or the fintech revolution is happening? And how long do you think it will take for you, considering all this background where the penetration itself into the making money area is very less, will take for you to maybe, make money or make profitable?
Very good questions, both. So first is, how do we see this wealth market panning out, right? Given that there is still narrow penetration, of course, between women, but also with the population as such. So one number that really surprised me actually is that, do you know how many people in this country have their PAN and Aadhaar linked?
I think maximum maybe 90%, more than that.
So, percentages don't make sense in India because a large percentage of people are outside of the tax network itself. But that number today is 450 plus million or so, which is actually a massive number compared to a few years ago. Okay. And that number surprised me because if you actually see the number of people who are participating in the equities market, that's a much, much smaller number, right? That's single digits still, double digits still. So, and now here you have 400 million people, which means, and everybody has a bank account, thanks to Jan Dhan or whatever. Everybody has this identity. Now they also have the PAN number. Now you start putting that together and the mobile, it becomes an opportunity.
Right.
So the way we are seeing this is that you will start to see more people who will have that basic infrastructure to get into it, right? The opportunity actually, if you put the two things together, the mobile phone, the 450 million people who are ready to who have the basic infrastructure to enter the market, and the population that is actually buying these products because they think that's the only thing they have available. So that's a very big market. We have to find a way to get into it. We have to find a way to crack that. And we will, obviously. So people learn what is what they're interested in. So we feel like the other wave that is happening is this dissemination of this information about few very basic concepts of personal finance. Like if you, and it's still very nascent, but it will grow. It will explode. And you can see it exploding because there are influencers who are doing this. They're influencers who are doing this as a career. So they will take this message out to more and more people. But there are also NGOs, there are governments, there's SEBI, there's like everybody who's out there to spread. There's RBI, hires Amitabh Bachchan to talk about financial fraud, digital banking. So you see that whole ecosystem, how it is driving towards a much higher level of participation. So to answer your question, it won't happen overnight. And it won't happen because of any one person or any one app or any one person. It won't just happen because of Salt, but because the ecosystem is ready for it. We will be there to serve the customer. We will be there to give clean execution with high degree of trust and transparency. And that is what we will do. But we don't need to build that whole ecosystem because it's being built already. You can see it. You can see that people understand very basic concepts much more now than they used to, like compounding. like simple things like a lot of people still don't know about buying regular mutual funds versus direct mutual funds 10 years down the line after introduction of direct, right? They still don't know.
Right.
But it's not very hard for you to plug in those numbers and show them that if you had invested this portfolio in direct, this is how much money you would have made, because that number is substantial, right? So people are becoming much more aware of, inflation, for example, that we live in a high inflation economy. Bank accounts give you low rates of interest, and therefore your money is losing value. So all of these are becoming much more visual. So you see like this very simple TikTok type. We have a license. We have the ability to do execution. And of course, we are building the education in parallel also, because as you know, we have a very good Instagram page and people follow it and we put out very good content. But I'm just saying that the great thing to know is that you're not alone in that journey. Loads of people are doing it.
But when it comes to finance, still it's a very, very niche area. So what makes you really confident that maybe in next 2 to 3 years, the world of women specifically getting into the finance will change? Because everybody is, talking about it and giving an example how the Gen Zs and millennials are, looking at personal finance or websites. But there are also data points which suggest that people are very investing for a short time. They are more interested in cryptocurrencies and this kind of, segments. So what makes you confident that yes, the rally is changing and it will continue to change and become a sustainable, product in couple of years?
No, very good question. It has to be habit forming. If it is not habit forming, it's not going to happen. Yeah. Also, the amazing thing about finance is that you need it all your life.
Yeah.
So it's not a product that you will need at one point of, like, you won't do home renovation once and then you will do it after a few years. Money is something that you will engage with all your life. So if your habit changes, then it sort of changes for all your life. It doesn't happen like in fits and starts. So why will it happen at this stage is because and you're right, when it comes to the millennials, right, their driving factors may be different. Their driving factors may be, community, wanting more financial independence. We were interviewing one girl and she used to invest in crypto. And we asked her, you never invested in even mutual funds. How did you directly went into crypto? And she said, it's because my dad would have a view on anything that I did, but he doesn't understand crypto, so he would have no views. So people have different ways, different way in which to experiment. But the reason I'm not against it is because I think a lot of us talk about it, but there is a cost to learning something.
Right.
Your method to learn it may be different. Maybe that girl today, because she went into crypto and because crypto went through this down cycle, is today buying mutual funds or today buying, ETFs, or that was her learning. That was her education. She built it. So people will build their understanding through different platforms. The amazing thing about platforms is that because they are available, they make this learning into a pull product. The power of that is that people can pull information that is not necessarily what is being sold to them. So the problem with finance has always been that people's understanding of finance has actually been sold to them. Once a product gets regulated, it gets hyper regulated, and the ability of a regulated product to communicate is always more curtailed, but the ability of an unregulated product to communicate is amazing. So, a Sahara could go and build an amazing distribution network, but that is not always possible for a regulated entity. So, which is why changing from that push to a pull, which is what digital platforms have the ability to do, has this multiplier effect, and that's why I think it will happen now, is because that technology makes it possible to fast forward it. And whether it will be 3 years or whether it will be 5 years is something that we can sit and debate on, but it will not be 30 years. Right. That is for sure. It will not be 30 years because this generation will not let this run into the next generation. I'll tell you why. A lot of young women we talk to, they find it almost offensive that their mothers are equally well educated like their dads. But one girl said it very nicely. She said, my mother takes up to 4-digit financial decisions, and 5 digits and above financial decisions are taken by my father. So these girls have grown up seeing that inequity in their households, but they have been given equal exposure outside, because the same father who's taking that 5-digit decision with this bias in their household is not thinking that way about their daughters. The daughter goes to the same school as the son goes, etc. So I think this generation of young women are not going to let this run over into another generation.
Okay.
So that's one thing. But for me, I'm also very, very hopeful of my own generation because one amazing thing that happens in the world of women is that they learn from each other. It's a very interesting thing that happens. So like me buying a lipstick for my mother, right? A lot of young women actually teach their mothers things, mothers, aunts. We are amazed by the kind of pull that this product has. So we got invited by to hold a workshop for 200 police women, more than 200, 300 police women, because their boss was a woman. And she said that she was a central service IPS officer. So she said, I get paid a pension, but these women, because they're state government employees and junior police officials, they don't get a pension. So can you help them to build their savings for life? So we realized that the moment you put, so women of my generation, etc., who are in these positions, actually feel very strongly about creating this. So if they find a way to do it, then they're very happy to come on board. So we get like a lot of requests like that, and I definitely think that this is something which will change fast.
No, I'm sure. I think the exposure part is what really matters, and certainly things will change. So obviously I have been listening to you. It's been a great conversation, must say, learning a lot. But before I end up, let me take one last quick question to you specifically about the industry. We have seen a great rally in the fintech space. Everybody is praising India for its adoption rate, which is more than 80%. We have more than 20 unicorn fintechs now. Forget the 100 unicorns that we already crossed in the startup space. But on the other side, the companies, the ideal stage was to list into the market. One of the company where you already worked and you are already on the board, are not performing, the way the shareholders expected. So there is a dilemma in terms of where actually the Indian fintech rally is heading. There is also a fintech funding winter, which the investors also accepted. Given this background, Shinjini, how do you see the Indian fintechs maybe in next 2 years? Are we going to have a turmoil? Are we going to face a lot of speed breakers? Or do you see a seamless journey henceforth for the Indian fintechs?
Look, it can't be seamless for the simple reason that we are living in a world which has not soft landed, hard landed. Okay, so we had this, we were flush with liquidity, and then we had not just a liquidity problem, but also, not just interest rates hike, which normally would have also happened, caught up at some stage, but actually a war. So this is and high inflation everywhere. It's quite unprecedented at the macro level that we are talking about. So it cannot be a soft landing. It cannot be nice. So it will have some repercussions for sure. But to answer your more fundamental question, why are the revenue pools not shifting from a very, stretched conventional financial system that is not able to service this large set of consumers that are growing in this country, but continues to sit on that revenue pool, right? If you think about it, right? Why is that not shifting to the new players? Because that's how it should be. That's how it is, and that's how it happened in commerce, right? In a few, that's how it happened in music. That's how it happened in many other sectors. Why is it not happening in fintech? And to some extent, I do want to say that we have fintechs to blame a little bit, but we also have to remember that fintechs in India got built at a time when the payment systems in India suddenly took a leap and became like way ahead of everybody else. Now, so all our first stage of fintech revolution happened around that, around the ability to make quick, fast payment, etc. And those, we all know the story of how that revenue pool has not been disrupted, MDR, whatever. So we can talk about that. But when you still talk about credit, when you still talk about insurance, I don't believe so much about mutual funds in particular as a product, because I think it's just an execution product. The fund manager is sitting and building a product. What is your value contribution, etc. So we will see a much better, more organized advisory system, which will create wealth for other people and for itself. Not easy, but people like us will do it. We will see credit space having much more, I should say, sustainable distribution, because the last few years, the idea of credit was I have given so much loans in this time. That was a metric.
Yes.
The moment you change that metric,
Yes.
you're setting yourself up to fail, right?
Yes,
Giving loan is
yes,
not a metric.
yes.
But everybody has realized that, right? People have burned their fingers, regulators have come back with their thing. So now everybody understands what does credit really mean. So what credit means is what people will do and they'll make money. Because distribution in this country is a problem that cannot be solved by traditional financial system. The costs don't stack up. The 80-20 principle applies. So people will solve that problem. They will make money. Similarly for insurance. Uncle G has to be disrupted because if he is selling you 5 years premium and making upfront commission, and I don't even want to take percentages, but
Yes,
very high
yes.
percentages of commissions, at some stage people will figure that out and catch up with it and start looking for cleaner products. The market will shift. And there will be enough opportunity to make money. We haven't done it because we've all been so busy, making money on valuations.
Exactly.
I'm sorry to say this, but
Right.
because there was so much liquidity, what were you fighting for? You were fighting for becoming a unicorn.
Absolutely.
And there was
Absolutely.
no way that you could become a unicorn on a revenue multiple.
Yes.
Because that math doesn't add up. So obviously we went a certain direction. I personally feel that it's actually, so in a way it will be hard for us as well because we are at this time, but in a way it's good for us as well because it pushes us to, focus on execution, find the right client, respond to the client and build in a way that will be sustainable.
Right.
So, yeah, and I'm sure there'll be many other people who will do this because these are all smart people and they have the technology, they understand the clients, so I'm sure they will get there.
No, I think that's quite meaningful, very realistic also, and I think sooner they realize this basic parts that valuation is should be not be the criteria and maybe what could be the initial worth of it, because again the data points which they share, I have millions of customers, I do not know how to measure that, so that is only one way of looking at it. But I can see that there is a great rally for Indian fintechs. Everybody is talking about it. So you feel good about it on one side.
Yeah.
On the other side, being an Indian, you feel like, okay, something good should happen with all these fintech companies.
Yeah,
And they should not go down the
it's demand
drain.
and supply, right?
Yes.
You see that financial services is in short supply.
Right,
You can
right.
see that. So obviously, there is a huge market here that
Absolutely.
is ready to.
No doubt about it. But glad that we connected. Glad that you gave us time and shared all
Glad
the
that you
information.
invited me, and I really enjoyed this conversation. Thank you so much.
Thank you so much.
Thank you.
And thank you so much for watching Fintech Diary. Stay tuned to etbfsi.com. Thank you.